Hey guys, welcome to the first episode of UrbanZoom Talk. Today our first guest is Vina Ip, who is better known as the blogger behind a very popular blog called Property So, where she's been sharing tips and advice about property investment since 2010. She's also the best-selling author behind this book called The No BS Guide to Property Investment. I think what's really interesting about Vina is that she comes from a very neutral point of view in that she doesn't work for anyone from the industry, she doesn't work for the agency, she doesn't work for the developer. She come across as someone who just is a homeowner and an end user. She's been sharing her tips and advice since 2010. So let's hear what she has to share with us today. Welcome to the very first episode of, I think tentatively we just call it UrbanZoom Talk for now. We may come up with a better name, but we wanted to do a weekly podcast to have guests who know about property or know about real estate in Singapore to come in and share what they know with our audience. So but this is really literally the first one, and I'm super delighted to have my good friend Vina to come here and share what she knows. So
thanks for having me.
Yeah, so a little bit about Vina. So she basically more or less is a full-time blogger, and she only blogs about property. So maybe I'll let you share a little bit about yourself first, and then we
sure. I think I'm more known for being a blogger of propertyshow.com that's been running since 2010, so almost coming to 10 years for this August.
Okay.
Yeah. Wow. So I also have a YouTube channel and on this. And I have a Facebook page that have about 8,000 people.
8,000?
8,000 as followers.
Okay.
So these days I have time, I would do blogging, and then YouTube channel. If I have time, I would do the podcast, and then I will on my Facebook page every day.
So when you first started this is 2010, right?
Yeah.
But you had a full-time job then.
Yeah.
Okay.
That's true.
And so you were just blogging on the side. Like, what was your motivation? Why do you even?
Because I'm always interested in properties. It's my part-time hobby. So I enjoy doing research on properties, viewing properties and buying properties. I always want to find some like-minded people who also like properties, but not the traders type, but more serious investors who are value investors like me, so that we can share ideas. By the way of opening a blog and putting together my thoughts over it, then I hope that some people might see it and then exchange ideas. That's original purpose of having a blog. So but I never think that it would have so many followers. Yeah, because after 1 to 2 years, basically I built up a base of followers, and it slowly built from there.
But like initially, I suppose how frequent were you writing?
I try to do it once a week if I can. But
that's very frequent.
The original ones are very short ones.
I see.
Just somehow compared with what I've been writing right now. They're very short and such some ideas. I originally blog more about being a landlord, how to buy properties, how to invest in it, and it's from some very short pieces.
I see.
Then gradually some people they send email to me or they leave comments on my blog. Then I know that people there for it.
So when did it suddenly start you start realizing, hey, this is getting quite serious? You may actually do it almost like basically quit your job and do it full time.
I don't think that has something to do with my full-time job. It's just that sometimes you get too busy with your young family and also blogging, and also have to travel full-time.
Yeah.
You will need to prioritize because you only have 24 hours.
Sure.
So if money is not a concern, I would like to spend my time doing the things I really enjoy doing. Yeah.
I see. That's cool.
Rather than being too stretched.
Got it. And actually over time, I guess you obviously have a following. I'm quite curious, like what are some, I don't know, who are your typical readers or audience, like who read your blog, and has it actually changed over time?
Most of the people in Singapore, why they start to research or Google about properties because they want to buy their first private property. They try to do upgrade. Because to be honest, most of people, they just want to buy first hand from the government on a BTO flat. After the MOP period, then they will see whether it's time or they have the financial capability to upgrade to a condo.
Sure.
Then the Singapore dream is fulfilled and it is done, you see. This is what most of people are thinking.
Okay, from HDB to condo.
That's why that's the time that a lot of people, they try to research about it and then they find me. And then they start to read about it, and then they know that property is not that simple, like buying, especially buying private property.
Interesting. So you would say like a lot of people discover you just from Google or friend sharing and all that.
Usually it's on Google search.
Okay. And any really crazy or really amusing comments from your readers, or people who read what you write?
I won't say it's crazy or like memorable ones, because most of the people who comments are two extremes. Either they really like you, or they don't like you. If they like you, they will send very encouraging remarks saying that I like your blog, I've been a long time follower, please continue writing, I've been looking forward to your next blog post. People who really hate you, they will very extreme. Maybe they're property agents, maybe they
why would property agents
because you're saying that this is not the right time to buy, or I never say that don't buy. I just say it's not worth buying, you see, that affect their interest. Or maybe because they just bought, so whatever you say.
You made the wrong decision.
Are very angry that you make them feel that they have done the wrong thing, you see. Or all the while they believe in something, suddenly you say, hey, this is not true, you believe in the wrong thing. That make them sound very silly, you see. So then they're very angry. So usually people leave comments, they are like two different extremes. But I don't bother about it, when people that send hate messages, because I don't know that anyway. I'll just have a laugh and then just delete it. Because
that's cool.
But because for some reason they still follow you even though they don't like you see? So it doesn't matter.
Okay, that's true. Okay, cool. Well, then actually, do you mind sharing a little bit about like your own personal journey? You mentioned when you started in 2010, I mean, you were already a landlord, right? But how about we move back a bit to, I guess, the first one, and then, overall, how have you, you mentioned this is a hobby, right? I think this is a very expensive hobby, but it's a very interesting hobby.
I think it's no difference than ladies who like collection of LV bags.
Wow, it's a bigger difference.
But mine is a collection of property portfolio that I'm looking at. So I think it's no difference, because you like watches, like cars, you just want to have a collection of it. So I think that except the amount is different, you see, and you work on it.
Got it.
So basically it's the same thing. You like cars, you like watches,
sure,
you like properties. It's basically,
got
to
it.
me, it's the
so
same
how
thing.
was your first one?
The first one is I bought it October 2002.
Okay.
And actually
2002. October 2002. This is when things are already turning quite bad, right?
18 years ago. That is after the dot-com bust, after the US recession.
But before SARS.
Yeah, before SARS. Yeah, correct. That's a one-bedroom unit in the east.
And was it for investment straight away?
Yeah, for investments. I was actually renting a place with and sharing a private apartment with two other flatmates. I thought of staying there, but I think if I rent it out and use my CPF to pay for the mortgage, and that get the cash from the tenant, it can subsidize my own rent, and I still have some leftover.
But back then the mortgage rate is very high, right? Isn't it?
It's very low.
It's
very low. It's 1 point something.
Okay. Sorry. Okay.
It gets lower and lower over the years.
It was in the only late 90s that it was very high.
2002, 2003, 2004, still very low. Yeah.
I see.
Sometimes some of the packages, the mortgage packages, like no need to pay the principal for the first year, only pay interest, or pay nothing for the first year.
Okay.
Plus you have legal subsidies, you have cashback from the banks, because it's not a good time for them.
Okay.
So you have now there's no such thing.
But that one that you bought, is it already a resale? That means completed already.
Yeah.
So you straight away
I
bought
never
it and then you rent it out.
New launch properties.
Oh, that's interesting. Okay. So you don't believe in new launch, or why is that?
Because if you are buying and rent it out, I would like to have something that is already tested. That means you already have all the defects fixed, all the lights installed, all the basic furniture and renovation done. So when the handover date, I take it from the seller, I can just have my tenant move in. So there's no time. I don't have waste my time to renovate or touch up the place.
Got it. So, but I mean, as a landlord,
prices are more negotiable, right? Especially in the soft market. I can get any like fire sale or good bargains in the market when it's resale properties. Because defects are fixed. This is very important.
So you worry about really defects from new launches.
Now, any new units will have on average like hundreds of defects, you see. So why bother?
Put all the post-it notes all over.
Fixing it.
I see. Yeah. Okay.
You just want the ROI as soon as possible, right? As an investment, because you already pay deposit, you already borrow from the bank, you need to pay the mortgage, you need to pay the property tax and then management fee.
That sounds like a lot already, but okay. But back then, was it easy to lease out your first one?
But I learned something because that time after I took it over, it's almost Christmas time, so it's not a lot of people because it's holiday season.
Okay.
And then I need to wait till the following year, January, and before the Chinese New Year, then I can get
that's not too bad. I mean,
viewings.
You took over in October,
correct.
So 2-3 months. Okay.
So I learned a lesson that you should ideally skip the holiday season. Whatever things you not want to touch up your pace, and you want to rent it out, arrange viewings, advertise, try to avoid the festive season. But it's not it's not bad. The rent to market soft back then, but I was lucky to get a good tenant.
And is the typical tenancy term, is it the same as now, or is it always like 1 to 2 years at least usually?
Yeah. Okay. So depending on the tenant, can be 1 or 2 years.
I see. Okay, cool. And are you still holding on to that property? Or?
No.
Okay, make money already.
I sold all my investment properties, all 4 of them, between 2009 and 2011, before the birth of my second child.
Okay.
So that I don't have to handle the tenants and all that, do all the landlord's duties, which is quite time consuming, to be honest.
Of course, but on hindsight, those exit, I suppose, are also decent exit.
Right. Correct.
Because I see.
Most of them, the value almost doubled, 80% to almost doubled.
Got it. I see. Do you see that kind of? I guess we're shifting. I mean, a little bit more to just the overall industry and your view on it. That kind of jump in profit, that you saw yourself and benefited from. Do you see that kind of jump, in the future, like that kind of gain over a relatively short period of time?
The reason why I'm able to have the big margin is because I bought at a very soft market. The market is really very miserable at that time.
You're talking about 2002-ish?
Buyer's market. I bought between 2002 October, and then one more during SARS, June 2003, and then 2 more during 2004. And the last one I bought is 2007 April. It's my current residence. It's a terrace house.
I see.
So the total 5 of them. So these are the period that is almost a buyer's market. So you can actually name your price.
So you were basically from 2007 onwards. You were at least to 2010-ish, 11-ish when you started your blog. You literally have 4 tenants that you.
By that time, I starting like selling. When the government have these cooling measures one by one rolling out, I think it's almost times that you have to go, because you never work against the government.
Of course.
So if the government want to cool the market, you might as well cooperate.
So when the first cooling measure that came in started coming in, right?
2010.
Was it, and that was around the time you started the blog as well.
Yeah, that's true. Yeah.
Do you remember how it was like? What was the market thinking? Did the market think that this is just going to be the first one and there won't be subsequent ones, as we've seen, multiple rounds?
No, you never know. But if the prices keep going up, and then the government won't be stopping from there. You see, because the majority of the population in Singapore, they're more supporting the low private home prices. But higher HDB prices, so the value of the home keeps high, but the private home prices are not that high, so that it's easier for them to upgrade. To be honest, in fact, most of people in Singapore, they are not able to afford to upgrade, agree with me or not, to private homes. So it's very easy for them to say, private home prices are too high, the guy must do something. So versus there's only a small percentage of people like me who are multiple private property owners. So that's why you are not, if you are not the majority when it's time for election, the government have to prove that they are doing something, you see, to gain the votes, right? So that you don't have much say, in that sense as an owner. So whatever the government is doing, you must watch out for it. To make sure that you can still borrow, you can still refinance, you can still have sustainable return or reasonable return from your tenants, so that you have holding power for your properties.
Got it. Okay, cool. Yeah. So I guess from 2011-ish onwards, you keep writing, your blog, but actually since then you've been basically trying to look for another entrance point again, and it's almost 10 years now. So in your view, I guess you haven't found something that is that good enough to entice you to jump back in.
I think it's very interesting. People say that I'm very pessimistic and I'm net sayers, always say cannot buy. I never say cannot buy, I'll just say it's not worth buying. And what they don't know is that I've been buying, but I may not be buying properties all the time. I buy other things as well. I think most of the Singaporeans, they only know that there are stocks and properties to buy, but they don't know that actually a lot of other types of financial instruments. I've been buying, but I'm just buying different things. I may not be buying all the time, but sometimes I'm also buying. But because it is a property blog, so I only talk about properties.
Got it. I see.
While you're just focusing on properties, you're missing out all the other opportunities in the market, right?
Fair enough. Okay, I do want to shift back a little bit about to talk more broadly about from the time when you started blogging, right? How do you think that the whole so-called real estate industry in Singapore has evolved, like from the time, say 2010 to now? Like any of your views on the industry that has changed quite significantly from the time you started? Any particular? It sounds like you always think that at least for you will just buy resale, right? It sounds like that hasn't changed. But is there any particular views about the market that when you started you think one way, now you start to maybe think the other?
I don't think I have changed much, because from the beginning, my thoughts and my investment philosophies as a value investor, I only buy when nobody's buying, is still the same. I'm still looking at buying value properties. I still believe in buying when there's nobody buying in the market. I still look for bargains, and I buy low, sell high. That's my strategies that haven't been changed. I think what to change is the experiences I built up over the years. I'm now more experienced as an investor. I know more about the market, and I know how to be a better investor and a better landlord. So those are the things that I have learned over the years, but my views and my thoughts haven't been changed.
I'm curious though. It seems to me rather obvious that when you want to invest in property, because you can mainly only go long a property, right? You can't like stock, short a stock, which means you want to buy low and sell high. Everyone want to buy low, sell high. The question is, of course hindsight is 20/20, but how do you know at that moment, that this is value, right? You mentioned you're a value investor. How do you know this is of good value? Like, what are some of the indicators that you were looking for?
That is quite obvious to me. So when you see there are less listings in the market, when you see the agent have a lot of free time, when you see that people hear about property, they say, are you crazy, buy property and at these times, you will definitely lose money. You must be crazy. So, or you're too ambitious, or you're too naive to buy now. Then you know that that's a good time to buy. People always say that over the last 10 years I've not been able to buy properties because it looks like prices are going up all the time. There are a lot of factors that are not under our control. Like, for example, the high liquidity, the printing of the money. Because when the central banks keep printing money, there's so much liquidity in the market. Where's the money go? It goes to the banks. The banks have to lend it to the companies to buy the assets. So that's why it inflates the prices of assets like properties. But as retail investors or retail home buyers like us, we don't have that kind of high liquidity. We are still on a very stable salaries that hasn't increased much every year.
True.
But we are asked to compete with all these big corporations that have cheap money borrowed from the banks. So do you think that it's worth to compete with them? For me, I don't think so. I don't think it's worth it, you see. So we have to wait. These are factors. These are one of the factors not under our control. So we don't have a choice, you see. So it will. But the thing is that the market is always a cycle. It won't be prices won't be going up forever. One day, somebody have to pay the price. One day they have to realize that there's too much supply for limited demand in the market, and prices will correct on its actual cost. And that's the time you can go into the market again, but not now.
Yeah, I mean, you talk about supply. I guess there's a lot of talk about, a supply glut. We did a study recently, and it's something like 10% of new launches or being announced or being constructed that is, versus the existing stock, at least in the condo segment. I don't know, does it sound like a lot to you?
But the URA have some published data for the fourth quarter of 2019 that shows the latest figures on all the unsold units and all the private residential properties coming on the pipelines. Excluding EC, we have now more than 49,000, and then including EC, we have 52,000 in the market. So you will see that 2022 and 2023 will have the highest number of TOP units in the market, between 15,000 to 18,000 in the market. Every year, we'll only be able to absorb on average 8,000 to 10,000 new units in the market.
At least 4 or 5 years.
So where do you find that number of buyers for new units? I'm not talking about resale, just new units, just absorb it in the market based on our population.
Yeah.
So I think when you think about the supply, where it comes from, what's the number, and then you compare with the demand, how fast our current population and our potential buyers able to absorb, and then you know that there's a very serious gap between supply and demand, and it's so much imbalance between the two. So somehow the open market have to go and absorb it. You see, have to correct itself. And that's the time that you know that during that time there will be a very good chance to buy. No, we're not talking about the economy. We're just talking about the supply-demand mechanism over here.
Or the physical stock.
Yeah, correct. It's not even talking about the economy, because we never know what's going to happen in 6 months' time. No, not even talking about like 5 years' time for Singapore.
Yeah, got it. Yeah, I mean, I totally can get about this whole. I mean, this whole supply and demand, imbalance, right? But the other thing, I'm starting to think more recently is that, I mean, obviously the older generation of Singapore, they have really reaped the benefit of I think two main engine of growth in the early years, high GDP growth and also pretty good population growth in the early years, and I think these two things will in general drive decent real estate prices, and it's not just a condo. I mean, HDB prices have increased a lot. I mean, if you buy from the 70s, 80s, you'll be double, triple easily, right? I don't know, but obviously both are largely gone now. We are not doing 6-7% GDP growth anymore. Certainly population growth is more the other way. So I don't know. I mean, even like you say, right, with maybe the supply overhang, coming to fruition where prices start to reflect that. But even that, I kind of think that, I don't know, maybe I just wonder whether the whole macro, like the factors, right, the underlying factors that usually it works very well for the past, like the original 3 or 4 decades of this country, Singapore, is missing now. So even if it correct, I wonder, even if you buy so-called the low dip a little bit, whether you can have that trajectory ever again.
I think people growing up in Singapore, they have only witnessed, especially the older generation, they witnessed the development of Singapore from a developing to a developed country, to a mature market. So they have experienced those very high growth during the decades. And they notice how the GDP, how the economy, how the infrastructure have improved, and property prices also increase, because you have high security, you have better salaries, better jobs to support it. So that's the only thing they see. But they have never compared, or they look at other mature markets, like for example Western countries, for example in Europe, how the property markets have performed over the years. There are ups and downs. There are times that they are high, but there are also times that they're very miserable, or the markets actually have done nothing at all. But they notice that. They should compare it with other mature markets rather than going back to history to compare with the time when we're going from an emerging to a developed country. So there's no point in going back, because some of the things are repeatable, like for example a market cycle, but some things they're not repeatable, and once it's gone forever. So we have to admit the fact that this is something that probably is not going to repeat itself unless which we don't know, we will never want it to happen, is Singapore go back to a very backward stage, or economy suffers so much that it dropped to a very low point, and from then
it's like a hard
we
reset.
go back again. So is that what you want? This is something that is very miserable. Nobody want that to happen, but it's only scenario that you have a chance for property prices to have that kind of huge growth again. If you drop to a very low point, then it can bounce back at a very high percentage. That will only happen like that, you see.
Got it. And I guess most recently, everyone is talking about, now it's 22nd February 2020, so we are in the midst of this whole virus thing. What do you think of it and its impact so far?
I have written two blog posts about the COVID-19, about the market, and the first one I compare with the SARS period. The reason why I compare with that, not because I think it's comparable to that time, it's because I want to show that in a market like that, it still present opportunity to buy at the time, because I really bought during the SARS period and what have happened. So I want to people use it as reference. But I know it's not can be comparable, because nothing is exactly the same, you see, or so similar to each other. But difference between the SARS period and now is that during the SARS period, because it's already undergone a lot of slowing of the market at that time. So you notice that for the whole year of 2003, actually the PPI, the property price index, only dropped 1% for the whole year. But what I noticed that is the transaction volumes drop a lot, because the sellers hold back because the buyers are not buying. So the transaction volume is going to be much lower, but there's nothing much that they have for to affect the price at that time, because it's already almost at the bottom of the markets. So how low can it be? Can it be lower? So that is the difference compared with now, that our market actually is not too bad right now. It is soft, but it's starting to correct, but it's not too bad now. That means the danger is that we actually have a lot of potential to drop. When you are actually at some height, there's a lot of potential to drop, see. Versus during SARS period, you're already at the bottom. It's not much you can still go lower. How much lower can the seller sell it to you? See, there's a limit to it. So what you have to be careful is that it might have quite a percentage of drop, because there's a potential drop, or might not have nothing to happen. But if you want to sell now, you actually don't have that kind of buyer base over there. So you if you are very urgent in need of money, you might sell. Otherwise, sellers will hold back, and buyers as well, because buying property is not their priority right now. So both seller and buyers, they will hold back.
Especially you don't want to do any home viewings.
You're
both
putting
side,
your agent
right?
in a very difficult situation, than what I said in the blog post.
I've heard of cases where, some homeowners who have been, basically listing, they're starting to pull back because they don't know who are these strangers coming to see my home. That's number one. But the other side is the same.
Home, Okay, we must disinfect the whole place.
And then someone show up and then you gotta exactly disinfect. So it's quite a tough one. But I was just thinking, I guess I somewhat agree with you that maybe now, unlike SARS period, 2002, 2003, where the market is already quite low to begin with, whereas what your point is that actually it's soft, but it's not low. Right? It's not like bottom of the market. It is slightly topish, if you can argue one way. But it also seems to me, I don't know, I don't have any real data. Maybe we should go and really study this in detail. But my gut feel is that a lot of the homeowners who still own homes today, they are not highly leveraged, so even if the market drop, like they can just sit on so-called paper losses. And
I think for homeowners, fans for the TDSR introduced in 2013,
exactly.
So not a lot of them, they are over leveraged.
Exactly.
So because if you already have TDSR in place, you don't over borrow. So for human mentality is that it's only done to a very low point that you have been unemployed for a long time, or your business is really bad that it's fault, and then you have to sell your home as a last resort. Otherwise they still hold on to your home. But for property investors, that's a difference, because the rental market has been soft for some time, and the return is low or negative, and you've been subsidizing your tenants stay there. That means the mortgage actually can, the rental cannot cover the mortgage and the management fee and property tax.
Yeah.
And now you have less foreigners coming in, less employment.
Yeah.
So it's more difficult for you to get a good tenant, and then the vacancy is high. So at some point of time, you have to cut loss. So that is the danger of the risk faced by the investors, by the landlords. But I would say that the COVID-19, the property sector that affect the most is not the private residential market, but it's more of the hotel property sector. It's because we have 2019, the first quarter, compared with this first quarter. The 2019, the first quarter, we have 1 billion Chinese tourists coming to Singapore, and then they spend close to 1 billion on their expenses. That's excluding sightseeing, entertainment, and casino. There's a lot of money, you see. That's going to affect a lot on our hotels, our retail, our F&B industry. So if these people are suffering, if the retail people are suffering, that means the retail property market is going to be very bad. And if the retail that cannot sell the goods, that's going to affect the industrial market, because the manufacturers no need to produce that much. And then it's going to affect the industrial market, and that's going to affect the office market as well, because they no need to expand the office. They may need to move out of the CBD. Or
I'm asking all my guys to work from home now.
Correct. They may have to cut staff, you see. And if people lose their job, then they would, after office market is the private home market, you see. So I think the most serious is the hotel, and then retail property, and then we're talking about the commercial part is the industrial and the office market, and the last one with the private home market.
Okay.
So that's a domino effect on it.
Okay. So I guess sounds like what you're saying is that you don't expect, maybe transaction will drop a lot, but prices won't move much.
It's going to be a stagnant market before somebody think, oh no, that's too long, holding for too long, and I must cut loss at a particular time, and then something will happen. But it won't be happening immediately, so there's no rush into the market. Because still, both buyer and sellers can hold their horses and wait for the dust to settle first.
Got it. Okay, cool. Okay, well, I got a couple more questions, actually, more general stuff I want to ask you. Maybe going a little bit back to, I guess, your, let's see, going back to your experience as a blogger, right? I'm just quite curious to know, because my own view, right, is that actually Singapore almost have an oversupply of people giving commentary or analysts about the whole real estate market. I mean, I don't know, we're typical Asians, we like to talk about property, and it seems that, every day in the news, it seems to me half the business is somehow real estate related. But you to me is quite an interesting voice in among all this. I don't know, since you first started 2010, have you seen other people, like yourself, who's a bit more independent and contributing to the conversation? Or
I think you were talking about neutral property blogger that's not making money out of it, and they're completely neutral on this. And they are from the consumer side. I don't think there's anybody that's as active as me, to be honest. I think this industry is very interesting for property content. You have tons of it in the papers, in the property portal, in media, but they are all from the vendor side. They're all from the developers, from the agencies. They talk from the analysts, from the banks. All these people are from the supplier side. That means they are so-called the industry stakeholders. All the spokespersons that's quoted in these articles are the industry stakeholders who make commission, make money out of it. But you never have anybody that have a voice on the consumer side. But we consumer buyers and property investors, we are footing the bill for the whole industry. So if you look at maybe the food industry, restaurants, maybe hotel, even travel, every consumer, if they have passion in something,
that's true. There's a ton of travel
they will
YouTuber.
Have blog on it, they have comments on it, they have their own forum about it, you see.
Food
but
channel.
It's interesting that private properties is something that is probably the most expensive big ticket item that we buy in our lifetime. Yet, consumers have no say in the whole thing at all. So
I guess
that's what I find very interesting. You see, it's only one-sided from the vendor side all the time.
Okay, I guess firstly, not too many people out there think of property investment as hobby like you, and also.
But they do buy private home. They do hope to upgrade one day to condo or private properties, right?
It's true. That's true. I never thought of. I mean, I guess food and travel, all these kind of categories, like really things that you do every day.
Even free gifts, we have forum or blog talking about free gifts,
Yeah,
but private properties like easily 1 million, 2 million. Come up price tag, yet consumers, they don't come out and comment on it and say what they think about it, you see.
Yeah, I
find very interesting.
I wonder if it could be the case because, like you said, if you buy a home, this is going to be like the biggest thing your household will own. Like, so it becomes very, very intimate to your own, your whole. If I share my story, literally, I'm telling people how much net worth I'm own, that sort of thing. I don't know. Maybe some people are like. Thing like that.
I think Singaporeans are very interesting when they they want to buy a car, they would with everything online about the latest car models. They'll go to the showroom to have a test drive. They will share with us friends. They'll read everything that they can about the cars. But if they buy a private property or buy a property, they just
give it to themselves.
Go into a sales gallery for a new launch, and then maybe 15 minutes time they already sign on the dotted line, which I find it very interesting.
Yeah, true.
And most of the emails that I receive, there are actually two types. One type is they are people who ask me whether they should be buying a particular project. Which I won't reply.
Typical new launches?
Yes.
Okay.
I won't reply because I'm not promoting for any
developer.
Yeah, and I'm not an agent, so I won't be answering that question. Yeah. And other popular type of email, it'll be something like, I'm 44, my wife 33, we are IT professional, we have a combined income of $15,000 per month, and then we have a HDB is almost fully paid up, and then we are thinking about upgrade, and then we have a monthly, we have a combined savings of how much money do you think that we should buy and what should we buy? That kind of question I also won't answer because you know best about your situation. And people who ask for free advice are usually the type of people is either you have no clue, then you should go and do more research because you're going to buy a very big item. You should do your research, read about everything you can. And number two is that those people, they already have the answer in mind. They just want some reassurance from you.
True that.
So whatever you say, they'll go back to what their answer is, you see. The third type is that they want winner to have a stake in it. So next time if something goes wrong, they'll go back to you.
Sure.
So that's why I don't answer personal situation question.
I suspect that's why actually, a lot of people still, even despite the internet and whatnot, and there's so much talk about DIY and the demise of the agents. But to me, that particular so-called, I call it an insight, right? The fact that you want someone to side with you and tell you verified things that you already believe in.
Correct. You need reassurance.
As you make this one,
somebody will pat on your back. Hey, you have done the right thing.
Yeah, and that is usually come in the form of a human being called agent.
Yeah.
And that's why actually to me, at least to me that's why somehow people still want agent for actually that reason alone. It's a very interesting psyche. Okay, anyway, I think we should wrap up. But I have one last question for you. If you can give one piece of final advice, right, for both potential buyer and seller respectively, like what would be those advice?
Oh my God, this is very difficult because I have number 1 to 10 different types of
wow.
That are also very important.
Okay. Well, one or two. I mean, you can freestyle on it. Yeah. But any kind of things that you think home buyers and home sellers.
I think people have to understand that properties cannot always make money, and most of people lose money in investing in properties. They have to understand it. Those people who say that they make money are the people who make money and then they let everybody know. Those who lose money, they keep quiet.
True that.
And most of people lose money, but they don't say so.
I see. So you think most people lose money?
That's true. If you have done research, you will know. Especially those people who buy at the peak of the market or near the peak of the market, and then they have to force to sell.
Yeah, actually, we did a research recently. That's a 2-decade research, the one that appeared on Business Times. Okay, this one, self-advertisement, but okay, maybe separately we'll do another one. But I mean, that study, we really look at the actual realized investment return over time, and some years are really bad, like you said. Really, they do lose money, and even that study was in a way the best case scenario. We didn't take into account property tax, stamp duty, and all that, commissions and all that. So I guess, I mean, but having said that, in our case, we saw, I think it was like at least 80% of the people at least break even, on but maybe after taking into account all these commissions and all the year like maintenance thing, that you pay.
Yeah, not even taking into consideration all the expenses. They have to pay over the years. All the operational expenses.
Having said that, I think the thing that always is interesting about property is that, I mean, it's something so concrete you own, right? And
you can see it.
You can see it and feel it.
And it feels so good to tell people to invest in a property rather than going for gambling. But actually, you're gambling, actually. But I think it's better that you tell people that go for a vacation or you buy a fast car rather than you go there and buy a property but actually you have know nothing much about property investment. But you feel better because you think, wow, it's good you buy properties. That means you've been saving hard and then you've been doing the right thing. So people just want other people think that they themselves assure themselves that they are doing the right thing, but actually it's not. But people will tell me that, hey, I'm actually not investing in property. I'm buying for my own stay. It's my own home. But I think if you buy for your own home, you must be even more conservative because it's the last thing you want to do is to have negative equity. That means your housing, the value of it actually is over your is lower than your outstanding loan. That's the last thing you want to do. You should be much more conservative. So buy something that you can pay off 100% any time that you can. You see, so you should have that mentality.
So you still have a roof above your head.
Correct. I suggest people to actually. I think honestly, most of the time renting is much better than buying. So if I calculate my present home, I calculate that because I bought during the lowest time and when we have one of the lowest transactions in the whole estate.
Okay.
I calculate that with all the expenses over the years, we need to stay in our place for 20 years to be able to compare with we rent it from somebody else at the same pace.
Sorry, so 20 years.
If we don't buy our current residence, we can rent it for 20 years. And on the 21 years, we would actually spend more compared with we buy it, including all the renovation, including all the property tax.
I see. But that is provided that you really bought it.
Lowest time, So we want to buy something, calculate that if you rent the same place and not buying it, how many years actually you will have this break-even point. I think that would be very interesting to tell you. Because we're not even talking about the lump sum that you pay at the beginning of a deposit, because every month you just need to pay a rent, right? Which is a very small amount compared with deposits that you are paying.
Yeah, I guess, I mean, maybe I don't know whether it's an Asian thing, but I guess the concept of renting, you don't have a place called home. It just feels very, I don't know, psychologically,
I think that millennials, they are changing their mindset. They are not like us. That we need to own something now. A roof over head to feel secure.
Yes, that's true. But I mean, great advice. Definitely, actually, as like we did that research and we were quite surprised that actually quite a lot of homeowners, ends up not being a great investment. And it's a very risky one. You take out so much leverage.
Yeah, long-term rental, actually you're more flexible with the management of your finance. You are more mobile as well. You can move to whatever country, take up any job.
True. And then if the aircon don't work, ask your landlord to fix it.
That's true. That's true.
Okay, all right. Thank you so much, Vina. Thanks for showing up. This is really the first time we do it.
We enjoy the section.
Okay.
Thanks for all the good questions.
Okay, cool. Okay, I guess we'll see you next week. Okay, ciao. Bye.
Bye.